Hi, everybody. Thanks for taking the time out of your day for a few minutes to watch this video to look at a quick update on an inside look for qualifying for financial aid when it comes to planning for college. My name is Colton Hastings. I'm a CFP with PKS Investment Advisors. We are a Salisbury, Ocean City, and Lewis, Delaware accounting and investment advisory firm. So today we're going to take a look at just some pointers and tidbits on qualifying for financial aid and maybe some filing strategies when looking at the FAFSA and things of that nature. So without further ado, we'll jump right into it. The first thing I wanted to touch on is I don't want you to rely on luck when you're going through the college application process. You really want to be strategic about, number one, what institutions you want to look at, whether it's in-state public universities or maybe depending on your scenario, a private university makes more sense. So you want to look at what you're thinking you'll qualify for ahead of time, and then strategically with your son or daughter, sit down and look at what institutions make the most sense for you and your situation. So that what you're going to be looking for in one of the first initial steps is you want to look at your expected family contribution, or when it comes to the FAFSA application now, it's called the Student Aid Index, but they're very similar in what they mean. And what that is essentially is what your family is expected to put towards the college cost, be it tuition and books and things of that nature. There's a calculation that you input and it comes out with your expected contribution amount, and that would be what you would be expected to put towards that cost each year. So looking at that, the expected family contribution is expressed as a dollar amount. So if the higher that dollar amount is, the higher the expectation is that your family will be able to cover the cost of your your son or daughter's college costs. So there's two formulas. You have the federal SAI, which is the FAFSA application, and that is that student aid index that's recently changed. It used to be called expected family contribution for them as well. And then the institutional expected family contribution, which is tied to that CSS profile. That's roughly 200 schools that still use the CSS profile formula, and that's mostly private institutions. So let's take a little example of what this expected family contribution may look like. So in this example, we'll look at an upper middle class family, adjusted gross income of 160,000, cash and taxable investments of 125,000, and about 200,000 in home equity. So looking at the results of that, if we plug all those numbers in and the various items that we have to input, the parents' expected contribution for the federal methodology is 34,426. The student's contribution 0. For the institutional methodology, which is that CSS profile, the parents' contribution would be expected to be 33,315 with a student contribution of 1,850 for the total expected contribution of about 35,165. So will your investments hurt your aid chances? This is a common question for those that have, a 401k and various taxable investment accounts and maybe a Roth IRA of their own. Certain accounts this will impact and certain that it will not. But if we look at any sort of investments that parents may own, the CSS profile assesses those assets at 5%, whereas the FAFSA assesses those at 5.64%. So pretty close in percentages there. But there are some accounts that this will not impact at all. So Roth IRAs, SEP IRAs, Simples, 401ks, any of those kind of work-based retirement plans and some personally held IRA investments, those will be excluded from being included in that calculation. So the biggest influencers of this financial aid formula, what are those? So the number one would be income from your tax return. So if you're a high earning family, of course, that's certainly going to impact your chances for financial aid, as well as any parental non-retirement assets, such as a brokerage account, or if you have a big savings account, or even 529 accounts, those would have an impact on that formula as well. And of course, and one of the other large items is children assets and income. So if your child's earning a substantial amount of money, or they have a sizable investment account in their name or a custodial account, that could severely impact chances of financial aid. So let's look at a few ways that we can help try to maximize what you can qualify for in financial aid. One, and certainly one of the biggest, is consider appealing financial aid and merit aid awards. If you're in a certain scenario where you're using 2 years of prior tax return when you fill out these applications, maybe your situation has drastically changed by now. You're caring for a loved one, quit working, or you had financial loss, things of that nature. So if the situation today is drastically different than that 2 years prior tax return, it could be worth considering contacting the institution directly and see how you can appeal your awards that were given. And apply for aid early. This is certainly a biggie as well. The earlier you apply, the better. There's more aid available if you apply earlier on in the process. So certainly get those applications in as quickly as you can. Typically, this is October 1 each year, but the FAFSA has been a little bit behind this year, and last year it was December 1, I believe. So a little bit further behind on getting that in, but certainly get that in as soon as possible when the deadline opens each year. And another strategy here would be if you're paying for some upcoming expenses, first year of school, or maybe second year of school, whatever the case may be, try to spend the child's money down first. This is assessed at a much higher rate. And for the FAFSA, the child assets are assessed at 20%. So if we compare that to the 5 to 5.64% assessment rate, you can see that those child-held assets are much more harsh when it comes to what's expected to be contributed towards college costs. So if you need to buy a car or test preps or pay for a tutor or a computer or books, things of that nature, try to use those child assets first, draw those monies down, and then start to use the parental assets after that. This way you can get those child assets out of the equation, and the parent assets that are held are assessed at a much lower rate than those child's assets. And a number one key is targeting the most generous colleges based on your child's profile. So to get a little bit further into the weeds on this one, if you are a family that's low income and expected to have a large need-based aid, typically your best bet's going to be those larger public in-state institutions. On the flip side, if you are a family that has sizable investment assets outside of 401ks and things, just in a brokerage account, or you have a high income and you're not planning on qualifying for much for a need-based aid, what you want to look at is maybe a merit-based aid, and you want to look towards private universities that may have higher merit-based aid available, either through their endowment fund and things of that nature. So I would recommend looking towards an institution in that scenario that would have an endowment fund that is more geared towards merit-based aid rather than your large in-state universities that would typically be more geared towards the need-based aid scenarios. And some key dates and changes. The FAFSA has been trimmed from 108 questions to 36, so a little bit easier to get that in closer to the beginning of that window. So once again, try to get that application as early as you can if you haven't already done so. And the deadline for filing for this year for the 25 to 26 school year is June 30th. So you definitely want to get that application in prior to that June 30th, 2025 deadline. And just a key note here that anyone that must report info on the student's FAFSA, so parents, that's you as well, you must now create a federal student aid account. So when filing for the FAFSA, you'll have to go through the steps to create that account online as well. And finally, feel free to contact me if you have any questions. I know this was a quick, short video to summarize a few key points on college planning and looking at qualifying for aid in some different scenarios. But if you have any further questions, feel free to contact me. You can reach me at my email there. Certainly give us a call or go to our website at pksadvisors.com. Thanks so much for taking the time today to watch this quick video. And please feel free to reach out with any further questions. Thank you.